QuickBooks Pro Plus Desktop 2022 Reversing Entry Unearned Revenue Customer Deposit. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Desktop 2022. Here we are in our Get Great Guitars practice file, going through the setup process with the View dropdown, the Open Windows list on the left-hand side, Company dropdown, Home page in the middle, maximizing to the gray area, Reports dropdown, Company and Financial, going down to the Balance Sheet Standard, customizing it with a range change from 010122 to 022822, and then the fonts and the numbers. We're going to bring it on out to 14. Okay. Yes, please, and okay. Reports drop down, Company and Financial, Profit and Loss, range change, 010122, 022822. Customizing the report with the fonts and numbers, bringing that on up to 14. Okay, yes, please, and okay. One more time. Reports drop down, Accounting and Taxes, Trial Balance with the range change, 010122, 022822, customizing that report with the fonts and the numbers, changing that font on up to 14. Okay, yes please, and okay. Let's go back to the balance sheet. I think it's the best place to start here. Last time we did an adjusting entry related to the unearned revenue, actually putting the unearned revenue on the books, a little bit different than the normal kind of adjusting entry that you might see for unearned revenue in a textbook, in which case the adjusting entry in that case would be to decrease unearned revenue that had been posted to this liability account for the revenue that had been earned, and then record the related income related to it, decreasing the unearned revenue, increasing the revenue. In that case, it would be a permanent adjustment and you wouldn't have a reversing entry related to it. But as we discussed before, and if you can't remember what happened before, if you're jumping into here, you might want to look at the prior presentations to get our description of how we are using the unearned revenue and how we are entering advanced payments from customers, so that we can then get a context of where did this unearned revenue come from, and now we have to reverse it back. So the general idea would be that in the accounts receivable, we had overstated the accounts receivable so that we have understated accounts receivable because we had negative unearned revenue in there for customer deposits, which works quite well logistically, but it does not work as well for presentation purposes. Therefore, we increased the accounts receivable with a journal entry and posted the other side to the unearned revenue account so we can display this information, but we don't want to leave it this way, because if we leave it this way and we go back to the normal accounting process, which was working fine, it's just that it didn't have the perfect kind of display purposes, then the accounting department is gonna say, what is going on here? I've got this added account, and it could mess up the accounting department. So what we want to do now is reverse it. So what we have at this point is the unearned revenue here. We posted something to the accounts receivable. If I double click on it and scroll down, it's going to be that 450 right here in a journal entry. Closing that back out, we also have to be concerned with the subsidiary ledger here related to the accounts receivable. It's broken out by customer by going to the reports drop down. We're going to go to the customers and receivables. Take a look at the customer balance detail. Changing the date range from 010122 to 022822. Then we have these items being our adjusting accounts in this customer that we made up called ZZZ adjusting entry. And if I scroll back down, you can see these negative amounts were actually down here in actual customers. We had a negative amount there, which was a deposit that had not yet been applied to an invoice because it was a prepayment that had not yet been completed in terms of us receiving, in this case, the guitar, providing it to them with the invoice. So we have that negative receivable, which should be a positive liability. And we have it down here as well. When we did the adjusting entry, QuickBooks forces us then to use a customer, which is actually not good in this case because we don't want it to mess up or have anything happening to the subledger, because that's not our report with regards to our adjusting entries. Typically, that's not what we're mainly concerned with. We want to make the financial statements correct for display purposes. So instead of hitting these customers, which could complicate their detail, we made up this other customer up top and just did the full adjusting entry here because QuickBooks forced us to do that. And by QuickBooks forcing us to do that, the ending balance here, the 23,150,150, should match then the balance here, the 23,150,150. And so now we're going to do a reversing entry. If I look at the entry, just to take a quick look at it, and double clicking on the actual journal entry, double clicking on the journal entry again, then we see that it's when the adjusting entry was unearned revenue, which was a credit, increase in the liability, and the accounts receivable was a debit, which was an increase to the accounts receivable, and we had to apply the customer of ZZZ adjusting entry. So now what we want to do is the exact opposite of that. So it's a fairly easy journal entry, so we probably don't have to like screenshot it like we did with the long inventory or invoice journal entry. So I'm going to close this out. I'm going to close this out. I'm going to close this out and just do our adjusting entry by going to the company drop down. We're going to go on down to the make journal entry. Actually, I think we did it with the register last time. Let's actually do it with the register again. Lists drop down, chart of accounts, and the accounts receivable sometimes complicates the register. So I'm going to use the other side of it, which is going to be the unearned revenue, double clicking on the unearned revenue, close up the caret close, and then we're going to say that let's make the date here, let's make this 030122, and then we can see right above it, there's our transaction right there. And so we're just going to do the opposite, doing the opposite. They tell us what to do, and we just did the total opposite thing, just because. But this time we have a reason for it. So in any case, the other side's going to go to the split account. I need to split it because I need to see the customer information so we can add a customer. So we have to have the split down here. It gives us a little drop down detail. And then we're going to type in accounts receivable 450 ADJ entry. ADJ entry. I'm going to copy that here. I'm going to put it there. And then we're going to say this is going to go for the ZZZ adjusting entry customer, our made up customer that hopefully will not mess up the accounting department as we do what we need to do, that hopefully doesn't mess them up. So we're going to say okay. So we debited it and then we credited it. Should go back down to 0. Let's check it out. See if it does that on the reports. Opening up the closed caret, closing up this thing here, closing up this window, don't need that window. And then if I scroll on down, the unearned revenue has now no, it's still there. Hold on a second. Wait, I know, of course it's still there. I knew it was still going to be there because we're as of 2/28/22, so it's still there as of the cutoff date. But if we bring this out one day up to the 3/1, then it disappears. It is now vanished. It's now vanished like a ghost. So if I go back up top and look at the accounts receivable and double click on that, here's our detail here. Here's the 450 for the journal entry. And if I double click on it to zoom back in, we go to here, the register, double clicking on it, we can see it in journal entry format. So we've got the unearned revenue is now debited, which is decreasing the liability account. The accounts receivable is credited, which is decreasing the asset account. Closing those two back out, closing this one back out, closing that one back out. And then we can also check this out in the trusty TB trial balance on the left-hand side. Scrolling down, we've got the accounts receivable up top, and then we've got the unearned revenue, which is down below right there. This is as of the cutoff again. If I add another day, pick it up a day, there it's gone. If I double click on it, we could see the activity as it's there as of the cutoff. There's our journal entry, and then we reversed it. We reversed it with a reversing entry, and I called it an adjusting entry. I should have called it a reversing entry. Let me fix that. I apologize. We're going to call this a reversing entry because it's reversing, not adjusting. Reversing entry. Let's say capital. There. Mucho mejor. Mucho mejor. Okay, so then let's save it and close it. Save it. And then close this back out again. And so there we have it. Now I think it looks correct. And so there we have it. Now let's take a look at our journal report so we can see what we've done with this adjusting and reversing stuff thus far by going to the reports drop down, account and taxes, and scrolling on down to the journal. And we'll range change from, let's say, 2822 to 030122. There we have our activity. Let's sort it by the type, customizing the report, going to the filters and scrolling down to the transaction type at the bottom. We want the journal stuff, all the journal stuff, and then OK. So this is what we have done with the journals. A lot of activity that we have there, but these are all basically the journal entries for those 2 dates. At the end of the section, we will print out these 2 reports, one for the adjusting entries, which should all be piled up at the end of the month on 2/28, one for the reversing entries on the 3/1. So now let's go back to the trial balance, give a one last double check, see where we are, see where we stand. If you're following along, you can check your numbers here. And we will be making the backup files as well. Hopefully those will be useful tools to you to rework if you need, or jump forward if you want.